And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It's Thursday, May the 19th. I'm John Hoagland. Thanks for trusting me with your time. As always, we're seeking accurate context, good risk management, and always thinking about remaining patient. We've got quite the day ahead of us, it looks like, ladies and gentlemen. And I'm hoping always for the best for all of you and all of us as far as our trading is going. If you're already in the market, hopefully you've got things going your way. And we are looking forward to some information that's already out this morning. It doesn't seem to be helping our equities all that much. Nothing seems to be helping Lacey either. What's the matter with you? What's the matter? What's the matter? Good morning, girl. There she is. Jobless claims came out this morning. Not going to get any help, looks like, from that for our equities. The initial jobless claims last week was 197,000. They were expecting 200,000. This week came out a little higher than that, 218,000. That's the initial jobless claims. Continuing jobless claims last week, 1,342,000. They were looking for 1,320,000. Came out 1,317,000. So continuing jobless claims continue to slide to the downside while initial jobless claims leaking to the upside. We also had the Philly Fed number, which was also not very encouraging. They were looking for 16, came out 2.6. We also have existing home sales due out today at 9 o'clock Central and 9:30 nat gas numbers due out. On my mind this morning, just looking to, we're going to be opening lower, extending yesterday's losses as recession fears overshadow inflation fears, Treasury prices surge, and as yields fall, as investors seek safe haven. Gold prices surge overnight and surge this morning on a continuation of that. We're looking for safe haven. Crude prices soften in economic fear last night. The dollar stumbles 0.5% overnight. Retail earnings, Kohl's and BJ Wholesale this morning, and a little help from them as well, and pretty much rounded out the earnings season this morning. Not too much left to worry about as far as that's concerned, so probably not going to get much help there either. Yeah, you caught the free falling. Yeah, Lacey, I think, was singing along a little bit there. As always, make sure you hit the lucky like button, share, comment, question, feedback, and heckling and love are all welcome here on the Market Forecast. Subscribe to our YouTube channel. You get notification when we do go live. The VIX is up about 3% last I looked just a few minutes ago, 31.92. The dollar index down still about 0.5%, 103.33, and the yield on the 10-year continuing to leak to the downside. Currently, last I checked, at 2.8%. Got to say good morning to everybody and remind you that it's Thursday. It's Make Hoag Money Day. There's the link to get in. Right after the forecast this morning, we're going to take a look at the S&Ps, watch the open, and you guys are going to have some suggestions, hopefully bring your trade ideas, and we'll see if we can't make me some money. Right. Good morning to everyone. Brian, first in the room. You win the prize. Tachyon. Good morning, Shaw. Good morning. It took forever to watch the recap today. Yeah, there was a long recap yesterday. I apologize, but it seems to be people are liking it. But you had to watch Pulp Fiction in the middle of it. That's funny. Zach. Good morning. Tachyon down 150 down for the day. Had a good trading session after switching. It seems I can use one of the scraped strategies with micros. So tomorrow it's micros for me. Not a bad idea. Ran out of trades for today. Tom, good morning. Stash the beer. Mom's watching. I assure you, at this time of the day, this is coffee. Although it does say that Miller High Life is the official beer of me, but it's coffee. Khalid, good morning. James Swan, good morning. Terry, good morning. Alfred, good morning. Theo, Sarah Hall, good morning to you, and prayers and love as always. Dan Trader, good morning. Bill, Spencer, Tom, Bwahaha. Sarah, it's Thirsty Thursday here on the island. That's all right, Sarah. Mom will give you a pass. Not me though. J Trades, Charles, Devant, Marcelo, Research Sound Lab. Good morning to you, Rusty Golfer, Denise, Trading Research, Kevin. Good morning, Vince. Scott saw and he conquered. Perfect song, Free Falling Markets, right? Good morning, Giuliano. Andre, Spencer, equities look to set up another leg down. Free falling is right. Lacey's singing along. Good morning, everyone. Good morning, Stephen. Dr. VJ, good to see you again, Doctor. Dead letter opener, one of your great. Oh, well, good. I'm glad that you enjoyed the recap. I just like sitting around talking trading with traders. Appreciate the recap yesterday. Helped calm my fears. Good. Jackalo, Vince, yes, saying good morning to Mom. John's favorite beer is Old Style. Well, back in the day on the north side, it was Old Style. I've tried them all, and I actually do like Miller High Life. Ice and cold in a bottle. It's a coffee. All right. So, all right, we got about 7 minutes here before the crude oil opening. Let's start going through these charts. I think there's a lot to kind of unwrap in these charts this morning. Again, we're headed for another interesting and challenging day, and if you don't find your trade, it's okay. If you don't trade at all, it's okay. If you aren't trading, if you are trading, there's going to be much to know, much to learn today. Make sure you take advantage of it. You don't want to take a day as important as a day like yesterday or perhaps a day like today and just watch it blindly and not learn anything. There's purposeful, deliberate practice that we can learn today and yesterday that we have to be cognizant of. We have to pay attention, because the next time we see situations like this, the mind muscle, the recognition of the patterns that we may see today can become useful for us the next time the market steps into this kind of a situation. We don't see these situations very often. It's one of the things that makes them so difficult to maneuver, if you will. So let's jump in and start with the daily in the S&Ps. All right, so obvious, the market's going lower. The structure to the downside has remained largely since we were at the all-time high here. Here's 15% off the all-time high. Here's 20% off the all-time high. We are remaining in this downside structure. Volume and open interest were higher on the downside yesterday. An estimated additional 27,000 in open interest. So we know there was a pretty substantial boost in open interest. What does that mean? Well, it means that this isn't long liquidation. These are sellers looking for the market to continue the move to the downside. And when we think about the auction process, we've been saying the pullbacks, the rallies have been hollow. They've been low volume. They haven't brought in any open interest. As a matter of fact, we've been losing open interest on rallies. So those rallies have been hollow or weak. The downside moves have been strong. They've had higher volume. They've brought in open interest. So we were all thinking in the recap yesterday, I wonder what's going to happen with open interest today in the S&Ps. Well, we're getting a glimpse of our answer, and this is again the preliminary estimated number of an additional 27,000 in open interest on higher volume. So we have last week's low, which is the weekly kickoff low, which was tested within 4 ticks of last night. We have the 20% off the all-time high, which is approximately 38.46. Depends on if you're looking at the continuation chart or if you're looking at the actual June chart. It's close enough for rock and roll, if you ask me. Everything in futures is based in ranges or areas, nothing finite. So we had the bear flag. That bear flag broke out with bells on, if you will, yesterday. Weekly kickoff high. We've one close above it. We've left that. We've got now an opportunity for us to look to the downside. This pink line is last week's low as well as our weekly kickoff low. It's the low for the year, as a matter of fact. So what are we looking at? Well, we're not really looking at a whole bunch of overnight inventory. If I had to say the inventory was one way or the other, I'd have to say they were short, but we're going to be opening with a gap. We're going to be opening with a gap up against a potential support level. This weekly low from last week, the yearly low, has a natural tendency to be supportive. We're also looking at 20% off the all-time highs. So I'm going to just go with what I know. I'm going to go with gap rules, and I'm going to be looking at this weekly kickoff low and this area down here as kind of a pivotal area. I think there's going to be some pretty big fish down under this area here. The question is, are we going to reject and head back higher, or are we going to accept and continue to the downside? I think there's a low probability of us just chopping around here today. There's still, I think, a little too much emotion in this market. So I'm going to go with the basics. I'm going to go with, hey, we got support down below. We've got a gap. If we can't fill the gap, I'm looking for opportunities for shorts. If we get short and we accept down below the last week's low, weekly kickoff low, then we can see this market continue to move to the downside for sure. All right. So, well, nothing is, of course, for sure. What's our acronym here? ACH. Anything can happen. But the market is it's setting up for continuation to the downside. Doesn't mean it has to happen. I think it's going to be a fascinating trading day, whether you trade it or not. Yesterday was a tough day to get in. We talked about that on the recap yesterday. Yesterday was one of those days where the market just tries to keep you out. And remember that the next time the market is trying to keep you out, it may mean you need to be a little more aggressive on those pullbacks to see if you can get in. Always be thinking about risk first, though, of course. You've got to be thinking about risk first. It's going to be a tough day today. I'm looking forward to getting to make whole money, seeing what happens on the open, seeing if we can make some money early, seeing if we can get into a position that we believe in. Because it's possible there could be an all-day sucker today. I don't know. Crude oil. Okay, we had a loss in open interest off the high from yesterday. We lost about 7,400. Yesterday was switch day. There's only 41,000 contracts left in the June contract. We should be trading the July contract today. That loss of open interest yesterday could be indicating a long liquidation, some longs getting out. It's again hard to read because we are in rollover. 108.50 weekly kickoff level was resistant last night. 108.55 is our overnight high. We went right back to a resistance or / support level. What was this? Tuesday it was support. Today it's resistant. Some people disagree with the idea that sometimes support becomes resistance and vice versa, but this looks a little bit like that is true in this case. So we're back in range, back in value, back into all of this muck, I guess we could call it, as we finish rollover. Opportunities. Well, the economic situation has changed in the last couple of days. There's a lot more fear of recession, and of course, there's still the fear of everything else that's going on in the world. But I think the crude oil is really responding to the possibility of slower economic growth or even recession. And I think that's hitting crude oil as far as the demand here in the U.S. Who knows what happens in these markets again? So we trade what we see. The market is just opened up. We've got our opening range. It looks like it's been left at the low of the session, but we do have perhaps some overnight shorts in this market. We have opened with a gap. It's going to be, with the opening range at the low of the session, I'm going to really try and demand good trade location in the session here before I start looking for shorts. Here's the first minute. Oops. So yeah, it looks as though the opening range here has been left at the lower extreme here. The low of the opening range, 103.36. The high of the opening range, 104.13. 36 to, wow, that's a pretty big opening range. That's a lot of risk. 36 to 13. Oh my goodness, 80 ticks of risk on the opening in the first minute. That's a little bit risky. So if we have taken out the high of the opening range, and why this is saying that this is the opening range when this is the opening bar. If I'm going to be looking for longs, I'm going to really demand good trade location back inside the opening range. We've taken out the high of the opening range. We take out the low of the opening range. That may indicate that the market is possibly going to continue this push to the downside. The market opened, came back, tested this naked point of control. We do have a gap. Again, if we can't close the gap, we start looking for opportunities for shorts. Back to the equities. Here's the Nasdaq. Casey, the rule for gaps. If the gap doesn't close relatively early, subjective term, it's never easy, then we look for opportunities in the direction of the gap. Nasdaq, similar but different. Volume was okay yesterday. Open interest added an additional estimated 12,000 in open interest, which is rather substantial for the Nasdaq. Obvious downside structure remains. We got a vital support. If it's not a support area, it's a vital area. It's the low for the year that goes back, I think, back to March of last year since we've been down to this level. Overnight low stops short of a new low for the year. The S&P met it almost, I think, to the tick. We can go back and look at that if we want to, or you can check it out. Very close to the low from last week. It was our low from last night. We're 30% off the all-time high for the year. The S&Ps are 20% off. So the Nasdaq is continuing to be presented as the weaker market. Weak rallies again, strong downside moves, just continuing to batter this market. Fears, everything just keeps dragging us down. So again, higher volume, more open interest yesterday on this push to the downside indicates new selling coming into the marketplace. As long as that new selling continues to come in, we don't want to fight them. Now, here's our bear flag. We broke out. We ripped to the downside. Here's our weekly kickoff low right here. Last week's low. We stopped short of it. I don't know if that's a good thing or what. What doesn't happen can be as important as what does. Overnight, maybe a little bit of short inventory. I think it's kind of inert, the overnight inventory. Gap rules again. These are the things that we got to go with the basics first here. We do have a gap. We're going to be opening with a relatively high probability with a gap. So if we can't close the gap relatively early, we look for another test of weekly kickoff low / last week's low. If we find acceptance down there, we might see this market continue to roll over and head to the downside. Now that's the question, Jan. What is quickly when it comes to closing the gap? Sometimes it can be the first hour of trade, sometimes a little bit longer than that. But at least after the first hour of trade, you've established the initial balance. And one of the extremes of the initial balance has a tendency to remain the high or the low of the session. That's why I say it's subjective. We never know for sure when the market has given up on closing the gap, and it can go in the direction of the gap. So it's unfortunately one of those things that we have to feel for ourselves and just look for the opportunity to limit risk on any of the trades we take based on that and look for it. Ronell, thank you very much. It's a pleasure to have you here. I'm very happy that you're so pleased and hoping that I'm making a difference for you. Hoping I'm making a difference for you all. So gap rules up against potential support. Gold finally wakes up. It's 1 week to roll over in gold. Finally getting some motion here. Lost 4,500 in open interest on very low volume yesterday. Market seems to have used up all its ability to facilitate trade here. We've left the opening range at the low of the session. Economic fears are finally affecting gold. Volume was low again yesterday. Indecision yesterday. It's changing today. When we are in range, when we're in balance, we fade the extremes of the balance. We've broken out of this balance. We've left the opening range at the low of the session. We've got about 13 more dollars till we reach a level of importance. The weekly kickoff high at 1851. Let me make sure that's correct. I got all these numbers flying around in my head. Yeah, 1851 up here is our next level of resistance that I see. And I don't want to fight a day that where the market leaves the opening range at the low of the session. Let's look at the 30-minute chart here. This little red hash mark is where the 720, the 721 opening range low is. The market is one time framing higher. It's got a lot more space. It's already checked one naked point of control on the way up here. I don't want to fight this market. And every time I say that, the markets like to make a liar out of me, but I can't look for opportunities to short this market until I get to a longer time frame level like 1851. And if I'm not in it yet, it's going to be one of those things that's going to be really, really hard to get into. All right. So don't fight a directional move until you find some sort of structure that allows you to safely do so. And I think this weekly kickoff high is really the next level where I see that coming. Now we've just checked this naked point of control, but we're still one time framing higher. The opening range still the low of the session. I can't try and sell this. And if I've missed my opportunity for the long, I'll wait and see what other opportunities come down the pipe. Euro. All right. So continued testing of weekly kickoff high. We're testing it now. We tested it till you tested it and tested it. It's going to run out of sellers here eventually. The longer we keep pushing up against there, and if the dollar keeps slipping to the downside, it's going to happen. When, how, where, we don't know. Volume and open interest yesterday, absolutely meaningless. Losing 400 in open interest. Nothing to look at there. I think our best opportunity is near weekly kickoff high here today. rollover is on the 8th of June. So we may be starting to come into rollover for our equities. We're certainly starting to come into rollover for our treasuries, which I think start next week. Here's our weekly kickoff here. We've got settlement down here. We've got a very low volume, no open interest. This day didn't even need to happen, if you will. Now we're starting to see an acceptance above weekly kickoff high. Again, I don't want to fight this move to the upside. Okay, this was an opportunity for us to look for a potential short. It's an opportunity for us to look for a potential long if price gets close enough for us to be able to manage risk in a comfortable way for us. Think about where the market is going to be telling you you're wrong and try and get into that trade as close as possible. If you miss it, it's okay. There's always going to be another opportunity. Okay, we need new business for continuation to the upside here. Are we seeing it? We're going to see it in volume. We're going to see it in momentum. We're going to see it in participation. We're going to see it in open interest eventually. We don't get to see that today. Not looking to fight this. We've got plenty of opportunities to fill in old business up above. Let's look at the 10-year. So we're seeing a similar situation here in the 10-year. We had a potential bear breakout to the downside, which did offer one opportunity. But yesterday, on the way, when the rates started going lower and the fear started coming in, and the flight to quality started coming in, we saw some decent volume on the upside yesterday. You can see that down here. We also had a pretty steep increase in open interest. New buyers came into this market yesterday. 54,000 estimated additional additional contracts and open interest is something to say. We're continuing to push to the upside here. Volume appears to be pretty good for this time of day. I don't want to fight this move to the upside. We're in a flight to quality type of situation. And I'm certainly not going to be shorting this, especially if the equities roll over and start to head to the downside and get into their free-falling mode. So opportunity here. Yes, we had a gap. We have not closed the gap. Look at the 30-minute chart. So here's our 7 o'clock bar, 7:20 of the market opens, 7:30 bar, pushing us above weekly kickoff high. No attempt here at all to close the gap. We've got some overnight longs here that are continuing to get paid. They're looking for a longer time frame, regular trading hour traders to continue to buy this market. If we can hold it above weekly kickoff high here, I like the odds of it continuing to the upside. If we can't, we can manage the risk on that. We can maybe get an opportunity to look for better trade locations below weekly kickoff low, but before a gap fill or on a gap fill. I don't see that necessarily happening today. And now on to the natural gas, which is kind of suffering the same fate as crude oil. Economic fears have stepped on the upside auction that we had going. The market basically settled right on weekly kickoff high here. Unable to close above it, though. Yesterday, we had a 100 contract decrease in open interest, very inert, no real change there, no change in volume. This market is sitting here waiting for new information. And don't forget, it is Thursday. They're going to get some information in the EIA nat gas stocks released today at what time is that again? 9:30 Central. Yep, 9:30 nat gas. So just going to be chilling out here, probably waiting for that if I'm going to be a natural gas trader. We do have maybe a little bit of information in the fact that here settlement is right here under weekly kickoff high. We do have some overnight shorts. We did open with a gap. So if we can't close this gap, we'll look for opportunities in the direction of the gap, which would have us looking for opportunities to the downside. I don't see that there's a big reason to get into anything today because, again, we're waiting for the EIA at 9:30 Central Time for us to give us some information. Okay, so we're going to try and keep this forecast relatively brief because we have the Make Hogue Money coming up here in just about 5 minutes. So thank you all for watching. Be careful today. Trade well. Remember, your goal is to always trade for tomorrow. You want to be here to trade tomorrow. So manage your risk. Look for good opportunities. If they don't come to you, sometimes you're better off waiting. There's nothing wrong with having no position. It is a position. Let's take our deep breath. Get out there and profit today. Trade well. Be kind to yourself. Be kind to others. Keep praying for world peace. And I'll see you in just a couple of minutes here at Make Hogue Money. I am going to put the link in one more time. And I look forward to seeing you there. I'm looking for a couple of people to chime in and start talking. So bring your trade ideas. Other than that, we'll see you in a little bit. Trade well today. Be careful. The goal today and every day is capital preservation. See you in a couple of minutes.